Hey folks, how you doing today? Hope you're doing well. Welcome to the YouTube channel. So let's get into it. I had a couple of trades today. Actually, I only had one trade really. So I'll be honest with you guys, my account is very small right now, and I let it get to the point where I was literally trading with a $100 account. So I kind of blew that up, but like one trade at a time basically. And like yesterday, I remember I shared it with you guys that I had one big loser in the morning that kind of gave me a 4-hour loss. So I was setting it up to have 10 trades with that $100 account, and really all I got was 5 or 6. So yeah, but anyways, today I went in, my account was a balance of $46, and I've never traded an account this small. I'm being 100% honest with you guys, okay? I went in today saying, all right, I'm gonna take a couple of trades, and if I start getting onto a roll with scalping, then I'm gonna keep trading. But if my first trade is a loser, then I'm likely not going to be able to keep trading. So then I'll just stop, right? So what happened was I traded the Nasdaq, and my first trade ended up being a loser, and that was it. So we'll just go over what's going on here today. We had a nice sell-off after the initial pop. So the futures had rallied overnight. And if you looked at the hourly chart, you would have seen that we were in an hourly uptrend, actually. So look at that right there. Higher low, higher low, higher low, higher low, and then we lost it, and now we're regaining it. So maybe the bulls can prove something by the end of the day today. So we'll see what happens. But this huge drop right here, well, congrats to the bears, of course. And unfortunately, Robinhood traders got messed up. And, you know, that kind of move will strike fear in Robinhood traders. Yes, absolutely. So let's take a look at what happened at the Qs. I'll show you where I traded and everything. So generally today, a lot of the tech names, Apple, Amazon, Microsoft, were opening up above their lows of yesterday and right around the high of the 5-minute lower high that had formed before we dropped into the afternoon here. So generally, the tech names were relatively strong, and that's kind of what kept me confident in being long the Nasdaq, right? So the level I was looking at was this 239.50 area, which would have been the 5-minute lower high I was talking about, but on the Nasdaq, of course. So take a look here. As we opened, we had a couple attempts to move lower, which failed, and then we moved higher to test this area. Now, take a look at how the price rejected 239.50 area. We rejected it once there. We had a higher high breakout. This one was a nice breakout. You can see we bounced right off the exponential moving averages 1-minute chart, and I didn't manage to catch that, although that was a nice one. Once, twice, and you grab it, you know? Didn't quite grab it. We bounced all the way up to this 240.30 area. I marked in this line after we had topped out, and just watching the price action here. Let's look at a 30-second chart. So we topped out initially, and then we started to pull back. Take a look at the pullback. We had an initial higher high breakout. Right here is when I wanted to take the short, and by the time we got down here, I thought I was chasing, so I didn't take the trade. What happened was we pulled back for a higher low and then bounced, and then I started to get long. So right here, my first trade was a long trade, and what I was looking at was this. Exponential moving average, 2-minute chart, holding supports, 239.50. So I was generally basing the stop under these lows here. 238.80 would have been the stop on that trade, risking about 60 ticks. A reward would have been about 60 ticks, something like that, okay? About a 1-to-1, maybe 1.2. So that was my first trade, and I got stopped out as we progressed through that. So you can see how we moved lower again, we bounced, and again, these sellers would not let up. The sellers were very strong up here. They would not let up. They were holding those offers very aggressively. And again, we tried to get back above this 239.50 area many times, always got rejected. When we came back down here, we had this 239, and just take a look at how it held. So we came down lower, tried to break the lows, didn't a couple times, attempted 239.50, you can see here once, twice, and then rolled over. And I stopped out of the trade, so no big deal there. That was my only trade, and I didn't trade after that. My account is too small at this point to keep trading. So I just said, all right, I'm not going to trade anymore, and we're just going to be patient. But one thing that I did do is that I took the remainder in my account, which was $20, I'll be honest with you, and I just dumped it into a call option, an out-of-the-money call option, expiring today. So yeah, I went full YOLO, and I grabbed one of those 241 calls. Now, obviously, it's highly unlikely that the Qs are going to close above 241 today, but just in case we get a V-shaped recovery, which is absolutely anything is possible. You can see at least we're in a 5-minute uptrend going higher now. I wouldn't really call this a 5-minute uptrend, but we'll see if we manage to get up there. I think it's highly unlikely that the Qs close above 241 today, but you know, anything is possible. We've seen massive drops followed by massive V-shaped recoveries in the past, so there's nothing going against that happening. Unfortunately, Robinhood traders got shafted today. So guys, manage your risk. If you don't know how to manage your risk, I'll show you how to manage your risk right here. So with options, you need to use a formula to measure the directional risk of your contracts based on the amount of ticks you're risking in the underlying, okay? So again, I have the formula here and I'll share it in a separate video. Actually, I shared it in another video, but it's basically this. So if you trade options short term and you're not using a directional formula to calculate the average delta over the price range of your risk, then you are doing it wrong, all right? So you need the delta, the gamma, and the amount of ticks you're risking to determine your actual directional risk. You use this formula to determine what the trading price of the option is going to be at any price you wish to determine, right? So if I want to know the price of an option 60, 70 ticks above or below the current trading price, I can know that by just putting in the inputs right here. It's math, guys. And I'm bad at math. That's why I got Excel to do it for me. All right, guys, so that's gonna be it for today. I think next week I'm going to take a week just to paper trade. I'm not a big fan of paper trading, but I am a big fan of my current method that I'm trading. And so what I'm gonna do is I'm gonna take a week, keep trading my method, only paper trading with futures, and just banging it out, trying and doing as many trades as I can, as many times the setup appears, just trade it over and over and over again, and then I'll just get back to it the following week, most probably. Again, I'm continuing to trade small capital in all of this because of the fact that in my first year of trading, which was 2019, I lost a lot of capital because I was learning how to trade options. But now that I actually know how to trade options, or pretend to know, I'm trading with a lot less capital because I want to prove to myself that I can grow a small account. I'm down $1,900 on the year so far, which is, in my opinion, which is not a lot of money in regards to, you know, standards of the kind of size some people trade in this market. So we're going with the flow here, one day at a time. And I'm on a journey, guys. I'm not in this for a week. I'm not in this to make a huge trade one day and then stop trading. I'm in this for the long run. I'm trying to develop a mechanical process that is an edge in the markets that I can execute over and over and over again with a positive expectancy. And that is it, guys. So let's see if the bulls can recover today. All right, guys, all the best to you. Take care. Bye.